All right, good evening. We're going to go ahead and get started with our committee meeting. It's 5 after. So we'll call the meeting to order. Thank you all so much for being here. We're going to start off with agenda item 2.1, opportunities for savings claims costs under the group health plan. Ms. Bernard, did you want to start it off? Thank you.
Good evening. We do have with us Lynn Fontaine, our healthcare consultant with HUB, and he has brought to us 4 different savings options, and he'll come up and review them for your consideration. Lynn?
And does everybody have handouts that?
If you have some, I'll give it out.
Okay. With regard to additional savings items, the emphasis I looked at here was where our biggest increase in plan costs is, and that's with regard to prescription drugs. Most of these savings items have little to no impact on your membership. One does, and we can consider that, but I'll go through them each individually and explain them to you. The first one would be to implement a specialty drug coupon management program. All of these specialty drugs, these high-cost specialty medications, come with manufacturer coupons for those that don't have insurance or those that have high-deductible health plans. These coupons give them financial assistance. You have a copay plan, and there's not much utilization or any need for utilization of that kind of coupon assistance from the manufacturer. So what this program does is it redirects those specialty claims so that the system can get the benefit of those coupons and a lower cost on those prescription drugs. And in looking at this program, it has no impact to the member. The member's going to still get their prescription drug. They'll just get it through this specialty pharmacy situation here. $350,000 of savings on that. So it doesn't change a benefit, doesn't change whether or not the medication's approved or anything like that. It's just a different mechanism to provide that and get $350,000 of savings. The next one is to implement a low clinical value prescription program. If you remember from previous meetings, there are a few medications out there that have become popular in that they don't have any real clinical value, and that if we take a medication that is a combination of like an Advil and a Pepcid, which are 2 medications that you can purchase over the counter for about $30, and you combine those two, and we're providing prescription medication to folks at a cost of $2,000 a month versus $30 a month that you could buy over the counter. We would think that that would be cost effective and doesn't have any disruption to your membership, because it really doesn't have any clinical value to spend $2,000 a month on 2 combined over-the-counter medications. That's $167,000 of savings. The next one is just to implement a high-dollar prescription review program. Right now, there's utilization management in your prescription drug program. Most of that not by dollar amount, but more by specialty medications, things like this, to make sure that those medications are medically necessary, that lower cost alternatives have been tried first. What this does is strengthens that and brings it to a dollar amount. So when that a prescription drug costs more than $1,500 a month, it implements that utilization review. Doesn't mean that if that member needs that medication, they're not going to get it. It just precludes physicians from prescribing high-cost medications when not necessary, and won't let this just slip through the cracks, so to speak. So that's about $322,000 of savings. The final one does have some impact. It's just a tighter formulary. A formulary is the list of medications that we cover through the plan. As the industry puts out more and more medications to cover different disease states, some of these medications have duplicates and high-cost duplicates, and what they do is tighten the formulary. All of your major insurance companies are going to tighter formularies. This does have about a 3 to 5% impact on your membership. It does have the smallest savings of $185,000. The first three have absolutely no impact on your membership whatsoever. The final one does have a small amount, but of course it does provide $185,000 of savings. These four measures together in prescription drugs will save you right at $1 million on an annual basis. These were, this was the area that I thought would be best to go into, in that I was looking for ways to bring in some savings that don't have any large impact on your membership, like increasing a deductible would, or an out-of-pocket or anything like that.
Yes, sir.
I just have a question. Obviously, on the first three, it's almost a no-brainer in my opinion. But on the last one, could you delve a little bit deeper into that relative to the how will it affect our membership?
All right. So if we were to implement this formulary, our prescription drug manager would actually, they're going to contact any member on these medications. So you've had formulary changes several times over the past, in that when your carrier, Blue Cross, would upgrade their formulary, some people's medications might go from Tier 1 to Tier 2, Tier 2 to Tier 3, or vice versa. As a medication becomes generic, it's going to go from your brand tier to your generic tier. So medications are going to go up and down in tiers from time to time. This is just another change in formulary, but tightening a bit to exclude medications that aren't considered cost effective. So if you have 5 different medications that range in cost from, let's say, $5,000 to $7,000 to treat a certain disease state, they might be taking out that $7,000 medication that has the exact same type of treatment that another medication would. It just narrows that list, so to speak.
Yeah. So when you your last statement, when you do something like that, when you and I'm just going to be speaking generic, very very generic, down to earth terms. If I'm taking some kind of a medication, say for asthma, and that medication is costing the entity $7,000 a month, and I don't mean you personally, but I am being told by our companies, listen, you can take this medicine right here for $5,000 a month. And what guarantee do I have, or who is certifying that that is, in fact, the same medicine, or the same exact, it has the same effect on my asthma?
Physicians, medical directors, pharmacists, the directors of the program, and then in the communication process, when communicating to the member, the pharmacy benefit manager also communicates to the doctor to make sure he gets his blessing. And there are going to be rare cases where that doctor says, we've tried all of that, this is the one that's working, and they'll just do an override on that.
Just one more question. if I have if I am a non-believer, and I don't care what the doctor says, I don't care what the experts say, I don't care what statistics say, I want to take the $7,000 a month medication. Will I have an option to do that but pay more out of my pocket?
If you implement this formulary, you would not have that option.
Okay. Thank you.
Okay? And to further answer your question, there are changes, and there have been changes, and there will be changes in formularies as time goes on. We read about a prescription med this morning to treat muscular dystrophy that costs over $1 million a year. It's going to make it into some formularies. It's not going to make it into others. This is what we're faced with the prescription drug industry right now.
Mr. Fontaine, can you describe the difference between the low clinical value prescription program and the advanced formulary control? It sounds like they're kind of doing the same thing.
Actually, two different things. The first one, the low clinical value, is to take medications that really don't have a clinical value of any kind. If we're charging $2,000 a month to combine two over-the-counter medications, the only value out of that is convenience. It's not really a clinical value. Okay, so that's the emphasis of that program. Whereas the other program, right now, you have checks and balances, utilization review, and utilization management in your program, but they're more steered by type of medication, diagnostic category, things like that. This is another layer that puts a dollar limit, that when that dollar threshold of $1,500, if we have a medication that hits $1,500, regardless of whether it's specialty, brand, whatever it might be, then there's that, it kicks in that medical management, and it's gonna catch medications that are being prescribed that aren't medically necessary or not cost effective. So two different emphases.
So the drugs that have the low clinical value, why are they being prescribed? I assume they're being prescribed by a physician.
Mm-hmm.
So why do they get prescribed if they have the low clinical value? To use your Advil and I forget what the other one was, Pepsid example.
There's a number of reasons. They might, physicians' practice patterns might have being called on by that particular drug rep and bought that sales pitch.
Okay. And so, well, let me ask this other question. Will the members have to go? I know you said something about the which one was it, the specialty coupon management or the low clinical value, where it sounded like they may have to go through a different place to get their prescriptions?
The first one, there would be prescription drugs that would be redirected. So let's say you're on a specialty medication, and that specialty medication, we've talked about, let's say hepatitis C medications that are $30,000 a month. Okay? Some of those have coupon assistance for $5,000. So if that coupon's not being utilized because you just simply have co-pays in your plan, nobody's going to pay a high dollar out-of-pocket cost for any of those medications. This just funnels that prescription to their specialty pharmacy, and the specialty pharmacy gets that manufacturer's coupon, and you get the savings of it. And
where this is another location or another company they have to go to?
All your specialty medications are not all, but majority of them are received through the mail, so it's just a redirection.
Okay.
Still going to get it in the mail, might come in a different box.
And then one final question, I'm sorry. On the formulary option, can you define disruption for me? It says 3 to 5% member disruption. Disruption is when a member is taking a certain prescription drug, and the disruption occurs when they find out that either that prescription drug is going up a tier or excluded from the plan.
Mr. Butch?
technology. Okay, basically what he said, I've already spoken about that on the board floor, where my wife had an inflammation and whatnot, and I think it was the same exact drug you're talking about, Advil and Pepsid. I could never remember it. Went to the pharmacy, and it came back around $2,000. Okay, so the little tech calls and says, Ms. Mouton said, this is $2,000. She's going, what? And then, well, what is it? And it's the two drugs. So she says, no, do not. You know, they called the doctor, placed her on the two medications, paid $10. Okay, so, but if we had not said, yeah, go ahead and fill it, then we'd have done that. The other thing with the coupon part of it, I have a grandson who's on ADD medicine, okay? And so, once again, we have a little pharmacy in Scott that does a lot of this looking for coupons and stuff, and they found a coupon, and instead of paying like $80, it was like a $60 coupon, paid $20. So he's absolutely correct when we talk about the coupons, and he's absolutely correct about looking at some of these guys are just putting things together and charging these outrageous prices. And so I think it is very well worthwhile looking into this sort of thing. Thank you.
And I want to elaborate a little bit on what Mr. Mouton said. I agree with that wholeheartedly, and I have a concern too. You know, we trust our doctor, right? When they say this is the medication you want to take, you need to take, we don't question that, and when someone tries to question it, we fight back. So my question to you is, has your firm done any research or aware of any research on a percentage of the time that doctors are prescribing certain medications in a formulary because their buddy is a sales rep? I mean, this is a reality. So do we have any data on that? Because look, the bottom line is, like he said, they prescribe these medications. It doesn't mean that there's not a better, more affordable option. And when they prescribe it, who are we to question it, right?
Right.
So do we have any data on that?
We've had data on that for years and years and years, and it's moving in the right direction because, as you all know, our generic utilization just keeps going up and up and up. What's counteracting the cost of that is these specialty medications that weren't on the market 5-7 years ago. The practice patterns out there as far as proper utilization, there's medications that are overprescribed, pain medication, hydrocodone, all of these kind of things, and it's not every doctor. And your claims administrator, Blue Cross, your pharmacy manager, they'll identify them from time to time. Sometimes we see providers getting called down for these practice patterns and things like this. So it's moving in the right direction in that doctors are more readily prescribing lower cost alternatives and practicing that kind of medicine. But at the same time, there's no such thing as a generic drug rep. You know? So what we keep looking for from our pharmacy benefit managers out there are tighter controls and tighter management, and it's a chess game because every other day there's a new med coming out in this specialty arena, and the cost of them, I mean, we're starting to talk to insurance carriers about reinsurance just for prescription drugs, you know? Some of the new cancer treatments out there, and all this stuff is good in that people are going to live longer, and they're really breaking new ground in medicine. But some of the new treatments are going to prescription drugs versus, let's say, a chemotherapy or radiation. But those prescription drugs are even more expensive than the chemotherapy. So it's all about controlling the cost.
Thank you. Yes, Ms. Saunier.
Yes. Mr. Fontaine, in October you came to the board and we switched from Express Care, which was a carrier that we had, to CVS because there was a proposed saving of approximately $3 million. Where is the $3 million? Why didn't we save it?
Well, when we reported, your prescription drug costs have come down considerably, and we've been monitoring that, and the savings have shown up. But we've got to remember, when you have a contractual savings of that $3 million, that doesn't mean that your pharmacy spend's just going to dip down $3 million. At the same time, you have the cost of prescription drug medications going up. So basically, it's probably more than $3 million we've saved. We're going to save in a year's time because of that contract. Because at the anything we do, and I really want y'all to realize that we are putting in savings measures, but at the same time we're dealing with commodities that keep going up in price. So if you save $3 million, we're bending the cost curve. That cost curve is going like this, and when we save $3 million, we're bending it down, but it doesn't mean that our costs for prescription drugs are just going to go down $3 million because we're dealing with something that is continually going up. So we probably will wind up with saving more than $3 million. And we update these contracts all the time.
I realize it's not you to report, but in the budget that the board just voted on, it's not reported in there, and the savings is just $1 million this year. But, you know, I don't know if they figured it, projected it for the whole year, or that's just what the savings is going to be. But still, you know, we raised the cost of everything, and yet we were promised in October this cost would come down. And I can tell you, the prescriptions I take, nothing has gone up. I don't know if it went up for everybody else, but it's been pretty steady. So, you know, we need to work with this and not try to put the burden on the employees or the school board, because our entire preface was we want to lower the cost of everything. We want to lower it for the school board, for the employees, for everyone in this scenario. And it's not happening, and we want to know why.
Mr. Fontaine, I agree with the concept that she put forth. However, I do understand and realize that, first of all, we're not going to be able to lower the cost. We may be able to find savings, but the cost keeps rising, so we're basically equalizing. And remembering that we haven't flattening the curve. And because we haven't increased premiums for a few years, that's where those, quote, savings have come from. So we're not going to be able to reduce the cost. Excuse me, I'll take that back. We can reduce, there's one way to reduce the cost, and that's going to be to get healthier and stop using all of these medications. That's it. And so because that's not happening, we're not going to be able to reduce the cost. We can't control the cost of health care. We're trying to control health care instead of the cost of health care. And that's very hard to do because it's habit. But could you elaborate on that? Because, I mean, it's a fact. Yes, we're saving money by doing this, but because the same thing is costing us more, we're not realizing those savings in the bank. We're just flattening it.
Yes, and to add to that, you're getting a much higher rebate, much higher discounts, better contract, all of that. When you compare to the contract you had and the contract we negotiated, there were $3 million of savings, but at the same time, you're still dealing with higher utilization, more specialty meds. So you would have spent $3 million more had we not made that change.
I just want to say that Ms. Sonia commented that her medication or the premium has not gone up. But I think that's a big deal to have not gone up.
Had you not changed the contract, it would have gone up.
Everything I watch on TV and the news and the printed media and radio, 200-300% increases have been taking place across this country. So to be level is, in my opinion, a very big deal.
Not only are you level, you're actually down. So it's working. Yes, ma'am.
My question is, using the formulary, how many drugs, if I've got one of those specialties that's $1,500 or more a month, how many drugs do I have to go through before that one will get approved, and for how long?
It's two different subjects you're talking about right now. One is... Well, one's called step therapy. Step therapy means you try lower cost alternatives before you get to a higher cost drug.
How many different ones of those, and for how long do I have to try them before you approve, or before the insurance would approve?
That all depends on a number of variables of whether it's working, not working, how many drugs are in that particular class.
Ma'am, I'd like to make a request. Because we're recorded, I'll ask two things of you. Please speak into the mic, and if we don't mind, let's speak one at a time so we can all understand what everybody's saying.
Okay, my question is, because this has happened to us in our family, there was a drug that my husband was on. It was a preferred drug. It was one of those that he had the insurance that go back and try these lower ones. He tried them. He tried another one. They still didn't work. He tried a third one. It still didn't work before the previous insurance would approve the higher one. And each time, that was 30 days. So for 90 days, he was without the medication that was working, trying something else. And that's a big concern for a lot of us.
And that's step therapy, and that has nothing to do with the formulary. What you're explaining right now is called step therapy. And
please explain the difference in that and the advanced formulary.
A step therapy program is designed to try lower cost alternatives before your doctor's allowed to go straight to the high cost alternative.
Okay, but he was already on the higher one. And when the formulary changed, then he had to switch to the lower one. He was already approved for the higher one. So assuming that this medication at this point, today, all of a sudden became $1,500. He's been on the medication. Now he's got to go down to something else in that last step that you're talking about.
And then to answer your question, it wouldn't affect that because he's already gone through that course of management, and implementing this low-cost alternative doesn't really make him have to start all over again.
Well, in this case, it did.
Shows that you tried these lower cost alternatives, you shouldn't have to go through that again.
But that's exactly the point. He was on a medication. He didn't try the others originally.
And this is when you switched from what to what?
This was probably 3 years ago. Something changed in the formulary.
That is your prior pharmacy benefit manager, the way that they were doing this. The way your current pharmacy benefit manager does that, they reach out, any member who would be affected by any of these programs, the current pharmacy benefit manager speaks to the physician, and all of that is
But sir, you're not answering my question. If today this were put in place, and we were on a medication, and now, according to the formulary, it's $1,500 or more a month. According to what you told us, then you'd have to go back and try the other.
No, ma'am.
Okay.
We
just want assurances that you would not have.
If I may, Mr. Hidalgo, I think you're confusing that high dollar prescription claims review. That's what you said was $1,500. And that would just trigger someone to take a look if any claim over $1,500, if that's where we would set the threshold. Yeah, so I think you're kind of confusing the two.
What you're talking about is step therapy, and it's not part of switching a formulary.
So the third one is step therapy.
None of them are step therapy.
I have a question with each dot. The coupons. Who's in charge of finding the coupons? I mean, Butch said his pharmacist found it, or should I go online and find them?
No, ma'am. A member will not have to do anything. A member has, in the coupon program, the member is not affected. You're just going to pay your copay and receive your prescription drug. The specialty pharmacy gets the coupon from the manufacturer, and the plan gets that prescription, pays for that prescription drug at a lower cost.
Now, what is a specialty pharmacy?
A specialty pharmacy is a pharmacy designed to fill prescriptions for specialty medications only.
Okay, I got it. Okay, number 2, is there another example of a compound drug besides 2 over-the-counter? Surely there must be compound drugs where one of the 2 is a prescription.
It's not a compound drug. A compound drug is a whole different one. But this one particular drug that combines those 2 is the main one in this category because it's quite expensive and it has very low clinical value other than convenience.
Now, a real source of concern would be the 3rd dot in the claims review program. Who makes the decision?
Same folks that are making the decisions right now. Your pharmacy benefit manager, your medical directors in your plan, all of that type of thing. And from time to time, if you're taking a medication and it's medically necessary, there's no impact to anybody on here. Sometimes a doctor prescribes a medication that's not medically necessary, and we see it. It's not all the time. I'm up here to tell you that physicians don't practice good medicine. Of course physicians practice good medicine. But sometimes you're going to find a prescription that was prescribed to a member that's not medically necessary. And to protect the integrity and share the costs correctly from all of you folks that are putting money into this plan and the board that's putting the majority into these plans, these are the kind of cost controls to make certain that people are getting the right medications and that it's cost effective.
Well, now, is there a review process once you're turned down?
Sure. So you can always.
All right. My last question well, it's a couple of questions for the 4th dot. Can you give a specific tightening of the formulary, maybe a specific example?
What we're going to do there is every single member that would be affected by that, and it's about 3% of your membership, will receive a letter. I don't have the whole formulary in front of me to give you an example of this particular medication, but they're going to be, most of them, some high-dollar specialty medications. And to address concerns of any member that would be impacted, they're going to have conversation and letters going out to those members and conversations with those docs. And once in a while, there's a situation that we've tried all of these different things and we need to override based upon medical necessity.
Well, that's good to know, because I know a friend of mine with a generic had a very, very strong allergic reaction, because the generics that they would rather you take than the $7,000 drug have different fillers, they have different dyes.
Right.
So there's still some appeals process going through here.
Absolutely.
Thank you.
None of this, folks, is designed to take a medication away or to make give anybody a situation where they cannot get treated properly. All of this is just cost control to remove things that aren't necessary, unnecessary spending of your dollars.
Are there any questions on agenda item 2.1? Okay. Committee members, I would suggest that I don't think there's any need at this point to take any action on this item. I think we're just here to learn. So if that's okay, we'll move on to item 2.2. Blue Cross Blue Shield Medicare Advantage Plan. Mr. Fontaine.
So Blue Cross had approached us a while back and told us they were looking into expanding their Medicare Advantage product to on a group chassis. That first they told us it would be ready by the first of the year, then they came back off of that, and then Friday they came to my office with a proposal. Basically what they've done is they have duplicated your current plan that you have with Humana, which basically matches the same type of benefit structure that you have under the partially self-funded plan. But instead of an increase in cost, it's actually a decrease in cost of about 4.2%. In your current plan, you basically have for retirees that are eligible for Medicare, and of course Medicare is primary in the partially self-funded plan, and self-funded plan pays secondary and of course pays those prescription drugs. In this particular plan, you have no co-pays, no deductible. You have $10 prescription drug co-payment for generic, $30 for preferred brands, $60 for non-preferred, and then the 10%, just like you have in your current Humana plan, and very almost identical to the benefits you have under your partially self-funded plan, but with lower premium. Now, from a network standpoint, just as you have with your Humana plan, basically any doctor who takes Medicare and who is willing to file the claim, you can see under this. Your Blue Cross individual plans for Medicare Advantage are under the Blue Cross HMO network, which is a totally different situation. It's a totally different network. It's a much tighter network. You can't really go out of state with it. You know, if you were diagnosed with a disease that made you want to go to MD Anderson, okay, that individual blue product does not have that available to it because it utilizes an HMO network. That is not the case here. Under the Blue Cross Blue Advantage proposal, it utilizes basically same type of network situation as you have right now, which means that any doctor who's willing to accept Medicare. So from the standpoint that you're already seeing a doc, if you're a retiree, Medicare eligible, you're seeing a doctor, they're taking your Medicare card, and then they're secondary filing to the plan. So there you know that doctor takes Medicare, so you don't have any disruption with your providers there.
Mr. Fontaine, I'd like to interrupt because I understand it. So what you said makes perfect sense to me, but I know from emails that I'm getting and phone calls that I'm getting that there is some misconception about how networks operate.
Okay, so I'll try to break that down for you maybe in some simpler terms. Networks are the providers that you go to have that contractual discount, and the providers you are allowed to see to get this type of benefit. Under your self-funded plan, you have the Blue Cross PPO network, and you go to those doctors. The plan receives a big discount. You have a much better benefit. You have your co-pays and all of that type of thing. In these Medicare plans, you have Medicare supplements out there, you have Medicare HMOs, you have Medicare Advantage plans that utilize broad networks, narrow networks. So there's a lot of confusion. So sometimes folks will say, this particular doctor doesn't take Humana. Okay? Well, that might not be the case because Humana's got several different products. Okay, and a doctor can be in one Humana product and not in another. And a big popular Humana product on an individual basis is the Humana Gold. A lot of people have it. Okay, and in a doctor's office, it might have a sign that says, "We don't take Humana Gold." Okay, but if that doctor files for Medicare and is willing to file a claim to Humana, That doctor's going to accept your group Medicare Advantage. Most do. Okay?
So if a doctor, go ahead.
So twice you said if a doctor takes Medicare and is willing to file the claim.
Right.
So is that a conditional probability thing, or is it sufficient that they take Medicare, then they take the Humana Medicare Advantage plan?
Not all doctors are going to. There are a few out there that don't file a claim for anybody.
But they take Medicare?
And take Medicare.
So they are not required, if they accept Medicare, they are not required to accept these Medicare Advantage plans?
No.
Okay. Thank you for clearing that up.
It's probably the broadest network you could imagine.
If they take Medicare and they're not willing to file a claim on, an Aetna plan, does that also, is it also mean that they're probably not going to file a claim on the Humana plan and the Blue Cross plan? I mean, how does that work? Because again, this is a Medicare network.
Mm-hmm.
So if the doctor accepts Medicare, then they will get paid if they file a claim by Medicare.
If in your self-funded situation, they're filing to Medicare first, then they file to us secondary. In a Medicare Advantage plan, they're filing straight to that carrier, okay? And that carrier gets the reimbursement from Medicare, okay? So they have to accept Medicare. It's going to be a doctor that accepts Medicare, and they also have to accept the payment from Humana, Aetna, Blue, whoever it might be. So moving down, the proper due diligence approach to this would always be, we know who your preferred providers are, okay, under your current self-funded plan. You do a provider match, and you confirm who's in and who's out. Okay, so we've got a proposal in front of us that's very, very pretty. It provides some savings. It's got, you can't get better benefits than zeros up and down this page. Okay, we all know that. So the next step of due diligence would be, let's compare, you got to compare two things. If we talked about formulary, okay, and we're talking about network, we want to make sure that if we put a plan out there to take care of these retiree population, and then all of a sudden, and we'd had 20% disruption in prescription drugs, we'd have mutiny on the bounty, okay? At the same time, with regard to the network, but I can tell you from the work we've done previously, I think the retirees are going to be quite pleased when they see the type of network, the type of benefit, and the type of choice that they have in their formulary in these plans. We've not had in different systems where we put in Medicare Advantage, and especially with Blue, they know what they're doing here in the state of Louisiana to come out with a product that would be restrictive because it would backfire on them from the get-go.
If you have a doctor that accepts Medicare, if a patient comes in for a service and they have Blue Cross, this plan right here, and the doctor files a claim to Blue Cross for that service, that medical service, and then the very same day, the very next patient has the exact same service. Let's compare apples to apples. And that patient has the Humana plan, and the doctor puts in a claim on that Humana plan. Is the doctor going to receive the same amount of money from the Medicare Advantage plan for both of those patients? What is it based on?
Based on the contract that they have agreed to. So if I'll go a step further. If you've got 10 people lined up with 10 different coverages going to the exact same provider for the exact same procedure, that provider will receive 10 different payments. because each one's based upon a negotiated contract. That brings us right back to the value of that transparency program that we're implementing, because even in network, if you've got to have a hip replacement, a colonoscopy, a MRI, diagnostic work, in network, and you have 6 or 7 different people to go to, the price varies heavily.
Mrs. Santana, you had something else?
Will we get this provider match document for both? Let me make sure I get this all right. So the self-funded plan, so the PPO, right, compared to both the Blue Cross Medicare Advantage and the Humana Medicare Advantage. So we could see if
right, so what
Justin Santana is a PPO provider, I would be able to see that my name is also on the Blue Cross Medicare Advantage column, but not in the Humana Advantage column.
That's exactly the type of due diligence it deserves.
Okay.
Can we get a microphone?
Right now with the Humana, we have a rewards program that is Humana 365 for healthy living.
We're going to get you a new microphone, ma'am.
Okay, I'll start over. Right now with Humana, we have a rewards program for healthy living. It's called Humana 365. Correct. For wearing my Fitbit, I get so many points every day if I make my steps. Every time I go to the doctor, and it's a Medicare annual, I get 2,000 points. That 2,000 points is $20 in gift cards that I can have. Is there a comparable program with Blue Cross?
Yes, ma'am. The only disadvantage to that is you would be starting over.
Right. But
So
we
let's
wouldn't be starting over till January?
Well, let's ask this question. Is there anything preventing us from offering both Medicare Advantage plans?
No, sir.
Right, and that was one of my questions. The second part of that is, what is the difference in the cost between the two plans versus the self-funded plan that a lot of these retirees are on now?
Well, I did an analysis, a cost analysis on the retirement, the Medicare eligible retirement population of the plan. And what we're spending from a fixed cost plus claims, less any reinsurance reimbursements, is about $140 per a retiree higher in the self-funded plan than what these Medicare Advantage plans cost. So if we just took the 207 folks and they went from Humana to Blue, the annual savings is about $37,000. If we took the whole population and it went from Blue to Blue, you're talking about $2.7 million in savings, but how long is that savings going to last? Because Blue Cross has got a pretty aggressive premium out there. Their loss ratio goes over 100%. We're going to get a rate increase. Okay? I'm not telling you that it's the solution permanently, but I can tell you that those discounts are deep, and the Medicare Advantage from a long-term standpoint will probably produce much higher savings. And then on top of that, you've got that Gatsby savings that helps you out financially. So by far and away, if we're talking about identical benefits, in a Medicare Advantage plan, you also have value-added benefits like she's speaking to, gym memberships, things like this, okay? And then on top of that, it puts the school system in a better situation financially from a Gatsby standpoint. It's win-win all the way.
Can you explain Gatsby?
What's that?
Can you explain Gatsby? Briefly.
It's Gatsby it is all about the liability of retiree plans, in the future. And when you go from your self-funded plan to a fully insured group plan, it lowers that liability.
So along those lines, you mentioned earlier that sure, it's savings immediately. There may be rate adjustments once they realize these claims in a year or 2 years from now. But my question to you is, let's just assume that the shift was from the current blue plan to the potential new blue plan. What would happen in a year from now to the existing plan because of the decreasing claims? Would it get a better rating?
Well, you're self-funded. So immediately you're gonna be instead of spending I think the figure was $429 per retiree per month, you'd be spending $342. You multiply that by the number of Medicare eligible retirees, and in 12 months you've saved $2.7 million. So without any doubt, if in fact the formulary was there, if in fact the network's there, which I strongly feel that you're going to see that when the due diligence is completed there, no matter where the rates go in the future, you've still banked that $2.7 million savings, and your financial picture, your bond rating is also better protected because you've lowered your GASB liability.
Matt?
One question, Lynn, on that Medicare supplement, isn't there some kind of federal subsidy that Blue Cross would get from the federal government that our plan would not necessarily get to help offset those claims?
So your plan's paying secondary, okay? So that really doesn't come into play in the self-funded plan. So in a Medicare Advantage, basically what happens is when you walk in as a retiree, and whether you have secondary coverage here or whether you've gone out in the market and bought an individual Medicare supplement, you're going to first show your Medicare Part A and Part B card. The doctor's office is going to file to Medicare, and then they file to whatever supplement coverage you have as a secondary carrier. In the way a Medicare Advantage works is you're going to put that Medicare Advantage card down, okay, and they're going to file directly to Blue. Blue gets reimbursed the Medicare.
So there's a supplement there that our plan as a secondary would not receive, that Blue Cross would receive.
No. No, your plan is self-funding secondary coverage.
Right, but the Blue Cross plan, the Medicare Advantage plan,
is paying that secondary coverage.
But they get an additional subsidy from the federal government as being a Medicare supplement.
Pretty much the same kind of subsidy, because your self-funded plan is being subsidized by Medicare being primary. So is the Medicare Advantage plan being subsidized from Medicare on a primary basis.
So they can do this cheaper, how, in a macro sense?
Tighter contracts.
Bigger savings, because they have a huge
population.
They can drive the prices down. Okay, that was my question from the economic macro view. How can they do it cheaper than we can?
The whole view of Medicare Advantage is the Humanas, the Blues, the United Healthcare's feel that they can do a more cost-effective job of managing that population than Medicare is.
So then they can provide better benefits and give gift cards to people with Fitbits?
Well, the reason they're giving gift cards and Fitbits is to keep that population healthy and lower their claims.
Yes. The cheaper we are. Yeah, that's correct. I have a question. I'm just trying to clarify. Did you say that in the Blue Cross Blue Advantage program you would not be able to utilize services like from MD Anderson? Was that my understanding?
No, ma'am.
Okay.
What I was trying to clarify there is Blue Cross has individual Medicare Advantage plans. Okay? If you live in and it's not the entire state, it's only available in certain areas. But if you live in that area, you can purchase that. And that utilizes Blue Cross's HMO network. That HMO network is much narrower and much more restrictive than that of your current plan. But what's being proposed here does not use that HMO network. It uses basically a PPO network that any doctor that accepts Medicare is willing to file. So.
Then I have, wait, I'm not done yet. I have another question. If I have Blue Cross Blue Advantage program and I decide to take a trip to Switzerland, am I going to be covered with my insurance plan? Or am I going to have to get a supplement because I'm traveling abroad?
In a Medicare Advantage plan, I'm gonna clarify that. I do believe there is foreign coverage in a Medicare Advantage plan.
And my last question, how much would this Blue Cross Blue Advantage program, what would be the cost for me? How much would I have to pay per month to have this plan?
That would be determined by the amount that the board would want to contribute.
You don't pay anything right now. I mean, we don't have any plans to put a premium on it. We pay the whole premium.
Sounds good.
Mr. Centani?
Okay.
Mr. Centani, I'm sorry.
What's your name, Mr. Centani?
Let me check my name tag.
I have two questions, and before I ask this question here, I don't want anyone to think that this is what I want to do. I'm asking just so we can all have this on the record. Is the school board allowed to force anyone onto a Medicare Advantage plan?
No, sir.
Thank you very much. The second question is a little more in depth. I heard you earlier. You said it's about $140 more per month for the Medicare eligible individuals on the self-funded PPO.
From a cost standpoint, yes, sir.
Is that $500? So that's $500 a month that we're paying total, or the board share? Because I see
That's total cost.
Okay, so I see $356 for the, or $342 for the Blue Cross Medicare Advantage plan. So I'm to understand $480 or $500 per member per month total cost for a Medicare eligible individual on the PPO, or is that for any member on the PPO?
The 342?
No, the 500.
What?
So the self-funded plan where Medicare is primary and we're secondary, what is the per member per month cost?
I have it right here. Or 29.
And that's total.
Mm-hmm.
And is that just for Medicare eligible individuals? Is that for our active employees?
Medicare eligible individuals.
And what is that number for an active employee?
I don't have that figure with me.
Is it higher or lower?
That was in prior reporting.
Is it higher or lower?
Lower.
It's lower. Significantly lower? $20 lower? Ballpark it.
150.
Okay. All right. So that puts us at 279 if and I'm not going to hold you to it, but all right. What percentage of the 429 is the school board paying?
85, 90%, huh?
No, it's not that high.
I think it's between.
Well, I guess we could ask it this way: what do these good people pay per month? Right. That's the same question I'm asking.
The retiree.
110. Going to $90. All right. So they pay 90, which means the school board is paying, what is that, $339? And Mr. Guidry, here's a question for you. How much of that $339 comes out of the 1987 sales tax?
%.
It's 50% of the single premium or 50% of the total premium?
Single premium.
Yeah. So it's 50% of the premium that's charged for single coverage.
So is that 215 or is that 165? Like, is it less than 90 first, or is it half that includes the 90? See, you get what I'm saying? 50% of the total. 50% of 429 or 50% of 339?
50% of the premium for a single coverage.
Total premium. The whole premium. So 215 comes out of the 87 sales tax. Correct? They pay 90, which means we're left paying 115, 120, 125. 125. I'm gonna get there eventually. I'm gonna just count by fives and times.
I found the exact figures if you want them.
All right, how close are we?
425.49 is the claims cost. $27.45 is administration. So age 65 plus eligible Medicare eligible retirees are averaging a cost of $452.94.
And they pay 90. And we pay 226. Or the sales tax pays 226. Which we pay 136.47. 136.47. Thank you very much. And we would be paying the full 342 under the Medicare Advantage plans, right? Which means
I think she's got.
We would again take 50% of it and put it to the 88 sales tax, and then the rest would come from general fund of that 342. So you'd still have cost sharing.
No, I understand
Oh,
that.
okay. But
No,
you would pay the board itself pays the whole thing. You're right.
yes. Okay, thank you.
Taxpayer pays the whole thing. Yes. At that cost. We got any questions so far? Yes. Oh, yeah.
Okay,
Mr. Bush.
on the Blue Cross, when we have that, the lady back there said that Humana had different plans, the 365, et cetera, et cetera. Is that going to also happen with the Blue Cross plan?
The Blue Cross plan will duplicate those value-added benefits, like Humana uses silver sneakers. Blue will have a similar gym benefit, that type of thing.
And that will be, the price for that will be according to whatever benefit you get from there. Is that,
No, sir.
no,
That's
just
all
one. This
included.
is all included.
Mhm. It's all included in the Humana plan right now. You have vision benefits, dental benefits. In the Medicare Advantage plan, there are a number of value-added benefits that you usually don't find in a medical plan.
All right, so I had a second to digest the numbers, so I got some other questions. Non-Medicare eligible retirees are essentially treated like active employees in our plan, correct? Am I right on that? What is that cost?
I have not computed that cost.
We
don't have the case separated, but we could get Blue Cross to.
No, I guess what I'm asking is, so is the bottom line number for an active employee, a single active employee, is it $452.94, or is it different? Because the non-Medicare eligible.
A single active employee is going to have a lower cost. If I just took the segment of retirees under age 60 or retirees not Medicare eligible, that would even have a higher cost because there's no Medicare primary there. That's regardless of let's say active or retiree, that 55 to 65 age group is where you're going to have your highest concentration of costs and claims.
So what I'm driving at is I wanted to arrive at, I want to know what percentage we're paying for each segment, I guess, that gets treated differently within the plan. You know, Medicare eligible, non-Medicare eligible, active, things like that. Because I think one of the real arguments we have every time it comes time to change benefits, raise premiums, things like that, is we're essentially arguing what percentage is each group going to pay. And so I think one of the solutions here is to have the conversation now. What percentage is fair for each group to pay?
You've got to also consider the fact that that's the beauty of group insurance, is that you always are going to have the younger, healthier population supporting the cost of the older population. And from previous reporting, you could easily see you've got about 15% of your membership that's driving 85% of the cost of the plan. So if we start to get into really directing premium costs, you would have one group paying this and another group paying hardly anything. So you really are talking about tiers of active, retiree, non-Medicare, Medicare. That's really the fairest way to split that up.
So, Mrs.
Just like the Office of Group Benefits did, that's where your tiers are coming from.
Okay. If I understand your question correctly, I guess the whole purpose of insurance is to spread the risk. So is your question about the different segments like retirees, Medicare eligible, non-Medicare eligible versus employees, or is it more along the lines of what is the taxpayer paying, what percentage is the taxpayer paying of their premium versus them paying of their own premium?
Well, that's all the question. But I mean, I think what we're talking about here is the overall structure of the funding, right?
Because I'm like Mr. Fontaine. If you start restructuring that funding based on the claims,
I'm not suggesting we do that.
It's heavy.
I'm not suggesting we do that. I'm suggesting.
But right now, it's about 65 to 70% was the last calculation that the taxpayer is paying.
Well, so look at it like this. It's you can look at it right here, $452.94, and the employee is paying, or the retiree is paying $90. So the retiree is paying 20%. Right
there you go. So that's 80.
So I'm saying forget about who's paying the other half. I mean, it's always going to be the taxpayer paying the other half. I'm saying that if we aim to hold the percentage constant, like, is the 20% fair? Is my question.
Is it fair?
That's exactly where I was going in that same direction. Most of your larger school systems pretty much target that 80% target. If you look at where the contributions or the payroll deductions are set, most of them are contributing anywhere from 75 to 80% of the cost. Some lower, but the larger ones and your peers at that 80th percentile is a target. And you're doing beyond that in many of your tiers.
And out of curiosity, the private sector, what percentage are they contributing?
That depends on the industry. In some industries, especially the one that supports everything from here to where I live along this corridor, most of them are going to, we're going to pay about 50% of the employee, and we're going to let you pick up the cost of your dependent coverage. So when you look at your offering here today and the type of coverage that you deliver at the cost you deliver it to, it's a significant benefit.
And in all fairness, that was a promise made. Trying to keep the promise, but I guess the point is that you made the point, and I was asking for. Thank you. Is that in most cases the spouse and the dependents don't get any support financially from in the private sector. Here, I think anymore. It's a little lower. I think it's about 65 or so percent versus the 70 or 80% that we're paying for the employee, but it's still huge. Compared to everyone around us. We get a microphone, please.
Okay, you keep saying about the other, the other people supporting the teachers and the retirees. The taxpayers. We were the taxpayers. We are the taxpayers. So we're in that percentage also.
Yes,
I mean, it sounds like they're doing all our work for us, and we were part of that too, and still are.
Yes, ma'am. I don't disagree with that. But when you look, Well, when you look at a parish that has, 250, 300,000 people in it, and you look at a school system that has 5,000 lives on a plan, that's a lot different number. So you have a larger amount of folks paying taxes into the system than you do on the plan. And that's the only point I'm trying to make. The taxpayers of the parish did vote for this, and it will get paid. There's no question.
Well, that's kind of like the people that go to public school and private school. Private school pays taxes too, but they have to pay for their schooling.
Yes, ma'am.
We all have, sometimes it's not fair. And you were saying something about this group between a certain age and 65 was paying the majority. Well, of the 80% or something of the insurance.
The rule of thumb is that about 85% of the cost or claims in the plan come from a small membership. About
Okay, but at one
15%.
time we were there, and we were contributing then for the people above us.
Absolutely.
Now it's the other group's turn to do us.
That's the premise of group insurance.
Yeah, that's the concept of insurance. I think the issue, if you would want to call it that, is that we're addressing here is that when you were in that group, if we're going to group you, when you were in that group, you were paying proportionally a whole lot less than that group today is paying because of the rising cost of insurance. And that's the battle, the rising cost of health care. And that's the battle we're facing. Not that you don't deserve it, and not that you won't get it, because you will. So please understand, we're just here to, could we please keep it down? This isn't me, this is an official meeting. We want to make sure that everyone, whether it's an existing employee, a retiree, eligible or not eligible for Medicare, is getting an equal balance from a premium standpoint and from a healthcare standpoint of coverage. And we're battling it because every year they come back, not they, but the healthcare industry, costs rise. It's a whole lot more expensive proportionally now than it was when you were in that other group that you referred to. Yes, ma'am.
Okay, Mr. Centeni, try to keep me right. You said that the board is paying about 30% of the insurance cost. The retirees are paying 20%, and the tax is paying 50%. Is that accurate?
I believe that is accurate, since Mr. Guidry said 50% is coming from the 87 sales tax. Then the general fund would be paying the other 30%, less the retirees 20%. The math is right. I don't know if the numbers are right, though.
I think the numbers are not right. I think it's 136 rather. But I might.
No, it's 136 from the general fund and 226 from the 87 sales tax.
Wait, I need to rethink the question.
Was there another question in the meantime? Oh, Ms. Mangum. Okay.
Hey, your statement about those of us that have been teaching 999 years and what we've contributed. When I started teaching, I made $300 maybe $10 a month. That's a long time we put money into the system, and I don't think you can say because it costs more now that we haven't done our fair share. And at one point in time, this district in the 90s was losing teachers right and left. And in order to make sure we were attracting the best and brightest teachers to come into this district, one of the benefits was the insurance for retirees. And it was so successful that at one point we had people coming here for their last year of teaching. And we had to set up a schedule where you had to serve in the district so many years before you got the insurance or got it proportionally. So we have been very responsible in working with that. But it was a benefit for the teachers to attract and keep them in this district. And I think it's been a real plus for this district in getting quality people. And we have, while my little $300 wasn't a lot, a part of it was coming into a district somewhere.
Thank you. Ms. Sonia?
I'd like to make a request. I have a spreadsheet right here that gives the total premium that you pay into insurance, what the half-cent pays into it, what the general fund pays, and what is the employee portion. And it goes for the employee retiree, the whole scenario, you know, family, spouse, that kind of thing. I would like this spreadsheet done with the current cost of insurance on it. The one I have is from 2015, and it would give us a much better picture if we had the spreadsheet for 2017, so we could see.
I'll give you mine. I think it's exactly what you asked.
Thank you. Well, I'll make copies so people can get it now. Thank you.
I was about to ask if you were looking at the same sheet I am. I was like,
I just want to interject, Ms. Mangum, that I think you're right. We historically and have always tried to get the best and the brightest teachers in Lafayette Parish, and I think we do. I think we have for the most part. I also think we have the best and brightest retirees.
it's because of your benefit policy in the 90s.
I just have one comment about what you just handed to me. You say the employee portion is 77% and the employee is paying 23%. I think it needs to be divided differently. There should be a column for the taxpayer portion, because that half-cent sales tax portion is what the taxpayer is giving to us. And the other thing, when we do the employer, we get money from the state to put into insurance. We don't know how much money they're putting, because I don't think we have percentage dictated. So it's not all coming from your money, your tax money. It's coming from the state as part of what has to go into the insurance. So it would really need to be broken down even further than this. Thank you.
Well, actually, the tax portion that you're referring to certainly does come from the taxpayer, but so does the general fund portion. So if you add those two up, that's where the 80% comes from. Right, so does the MFP, but that's where the average of 80% that we've been speaking of tonight comes from. Yes, ma'am. Can we get a, oh. Lynn, we cut you off a long time ago. Did you have more?
Just wanted to make one more point, and this is something I see throughout the school systems that I represent, and that and it's no different here because it was here before I got here. And that is, an active employee has a deductible. An active employee has a co-payment when they go to a doctor's office, or and an out-of-pocket and things like this. So there's a cost out of their pocket. What you have in front of you today with this proposal is no co-pay, zero deductible, and a zero premium. So I can tell you it's similar at other school systems, but even more so here, in that there has to have been some prior conversation of the direction of you guys and with regard to retirees, because the retirees, number one, most of them on fixed income and things like that, and a zero premium is well enjoyed there. At the same time, 100% benefit, you know. So I don't know that it gets much. 100% benefits at no cost is the best benefit I know of.
As long as the coverage is equal.
As long as the coverage is there. So in this due diligence, the real thing to look at, coverage on a piece of paper is one thing. That's the benefit, okay? But as long as you have access to the proper providers and access to a good formulary, it's a phenomenal benefit, especially when you take into account the value-added benefits on top of that. So the real due diligence is going to be Network's formulary.
Okay. I just have two things to say. My mom's almost 88, and I go on a lot of doctor visits with her. And so many of the doctors that she sees say, no, Humana will no longer be accepted as of whatever, or if it's not already been in place.
There's some product out there that Humana has, and there's other ones too. Everybody picks on Humana because they're the biggest one in that market.
But I'm just, that's the, they don't say no this or no that.
They'll tell you don't choose Humana because of some of Humana's individual products. And I can tell you that in other areas, either above I-10, below I-10, wherever it might be, if you try to take that Medicare Advantage plan away from the retiree populations in some of the other municipalities, we'd have war on our hands, because once they get accustomed to those value-added benefits and not having to pay a copay or a deductible, or it's easy to get accustomed to no cost on a monthly basis, it's just a phenomenal benefit.
I'm just concerned. I mean, this is like you said from last Friday. It's not like it's a proven product.
Oh,
though I certainly love Blue Cross Blue Shield, but their advantage.
May I make one comment? I think the question, or what I learned tonight, was the question to ask is not do you take Humana, but do you take Humana Medicare Advantage? In addition, like, you have to ask two questions, right? Do you take Medicare?
Humana Group Medicare Advantage, because there's individuals and different ones. But what we'll do is we're going to quantify, clarify who takes Humana, who takes Blue. We already know who takes.
In the end, will we still have the option to keep what we have now? Or I mean, I've only got 8 days before I'm at my 65 at my Medicare birthday. So.
You don't look a day over 50.
Thank you.
The question I asked earlier was specifically for that. Where is the school board allowed to force anyone onto a Medicare Advantage plan? And he said no.
I know, but so it will still be offered, the secondary plan that we have.
Unless we kick 8,000 other people off. Yes.
Okay. Good. That's what we need to. Thank you.
A lot of those decisions are to be made once all of the data is here. But can you have more than one Medicare Advantage plan? Yes, you can. I don't know what sense it would make to do that. Okay, because if one has a lower premium and the benefits are the same, and one has a wider selection of physicians and providers, I would think that we would be prudent in offering that particular plan. And then as far as a choice of staying into the self-funded plan, that all would remain to be seen based upon a number of different factors. Now, sometimes it makes sense to do that, and sometimes it doesn't. Well, I guess have to weigh all of those points out.
I need some help, Mr. Fontaine. When you come to the retirees and we invite you to our meeting, you paint a very rosy picture. And then I have to go back, because after this meeting, I'll have to go back and I'll have to paint a different picture. So maybe what I'm asking is for you to be a visionary and maybe foresee what may be coming, to give retirees an understanding of possibilities that may be coming. I think we need to have less of a rosy picture and have a lot of reality. I need that from you.
I'd like to say something. I think I've been to almost every one of the these particular meetings, And I don't ever leave the meeting and get in my car and go home and not have this sinking feeling. You think, as a retiree, and I probably didn't put as many years. I hit almost 30 years in this system. And I'm sure many of you have put more than that. And it's just really, it's disheartening to think that the retirees are thought to be like a problem. And I would have thought that after that many years, and for all of us, we would have had a lot more friends on the board. And it's a frightening feeling. It really is, because this sounds wonderful, and the plan may be incredible. But at the age that many of us are, and myself certainly, that at this age, suppose you get on this plan, and whatever it is that we have, and we all have conditions, because you're not going to get to this age and not have a condition. And it's frightening that you get on this plan and you say, well, okay, well, I'm going to go do this. And then you go to the doctor and say, oh, no, we don't cover this. And then you have already made the change. So it's the unknown and the uncertainty of it all. And it's really frightening. And I really would like to feel that as a retiree, I'm not creating a problem. Because when you hear taxpayers and you hear different things, it really, it's quite disheartening. It is. And I hope somebody on the board sees our plight and really tries to be a little bit more supportive. Thanks.
Here's a question that may soothe a little bit of the nerves. Okay, the question is, okay, if we try the Blue Cross Blue Shield Medicare Advantage plan and you're not satisfied with it, can we come back on the LPSS plan? That's the question, because if you want to try it and it works out for you, you stay on it. If you don't like it, then the question is, can we come back? In the past, we have had people to do that. They went on Humana and then they came back on the LPSS plan.
There's your answer.
I can't imagine that we're going to change that.
So this is the way that it's currently set up in the system entirely. Anyone can try anything. Someone who's on the basic PPO can go to a high deductible plan. At open enrollment, they can go back onto the basic PPO. They can go on to wherever they want to go. So you're waiting a year to make a change, and that's system-wide. Yes, ma'am.
I don't know. I mean, you can absolutely come back, but does Medicare have any rules about the time of year? Do they have to wait for open enrollment?
It's had open enrollment.
Okay, so you were right.
That may solve the queasiness if you can come back on the LPSS plan. And I had known that there was some questions that were asked many times that they had heard that you cannot come back. And there was another question that I had gotten from someone that said, well, when you get off of the LPSS plan and you're off of Medicare, you're now totally into the Blue Cross Blue Shield. So, but you still are on Medicare because it's part of their plan. They're getting reimbursed by Medicare, and you're still paying the premiums to Medicare.
So, to address the gentleman in the back, one thing that I do want everybody to realize is even in your partially self-funded plan, it pays for treatment approved according to Medicare, and so does a Medicare Advantage plan. So I don't want you to think that a Medicare Advantage plan has a different set of rules that under your current plan. And one procedure, you can get a gallbladder in this plan, but you can't get a gallbladder in another plan, you know? Things like that. Everybody's fearful about health care these days. We just talked about some of the cost of prescription medications. We just talked about the difference in cost between one provider and another. And I've come to 2 retiree meetings and made reporting, and same reporting that I've made to the board, and that picture is good, okay? And what we're talking about now is bending the cost curve on a plan that is millions and millions of dollars a year, and people are living longer. Healthcare cost is going up. So I don't want y'all to think that the picture is not rosy, because when we're contemplating a plan that has no copays, no deductible, no co-insurance, at zero cost, okay, that's a rosy picture.
Well, Mr. Fontaine,
I can tell you there are other school systems that can't financially provide that benefit to their retirees, and it is a dilemma for them.
While it may not be rosy, it is a good thing. I mean, I give the example, burning a candle. If you want to keep the candle burning, you just keep moving the wick, but at some point in time, the wick's going to burn out and you got to replace it. We are at that point. So we do have rosy here without having an increase in premiums for years and just making changes to the plan, but you can only change the plan so much. And I do want to say, to your point, sir, I know that several people, if not all of the retirees in this room, have somewhat of a feeling that that they're being picked on, and I think that's unfortunate. And I'll give you an example. My wife's a teacher in the system. She has been for 11 or so years, and she's on the plan. We're on the plan, and every year we get it's attempted for us to get talked into going to the high deductible plan. Every year we're encouraged and we're incentivized to go to the high deductible plan. Unfortunately, that plan is not best for our family. So we're no different than you, even though you are a retiree. We are getting pushed to a plan that's better for everyone, because everyone's involved. The taxpayer is involved. And so if we were doing away with your plan, then I'd be mad, as you seem to be, and I'd be wanting to chew nails as well. We are just trying to equalize the cost, and I am sorry that if you feel that you're being looked at as that way. I appreciate retirees. I know the board members up here do. That's a fact. If you can go back in the history of the votes, you can go back 3 boards ago. I mean, they have, I believe, consistently provided the best benefit possible. But we're all, quote, picked on somewhat for the betterment of the entire plan. And so thank you for being here, but understand that we're not picking on you. I'm not picking on you.
I'm not angry. I'm disappointed.
I misspoke. You're right.
And I don't feel like I'm being picked on. I feel, though, that I am the one on center stage in making the decisions that you're making, because it's a multitude of things, like you say that, we're going to have to look at this, and we're at a point. Then you look at how much the surplus, or how much we have in savings and so on. I mean, this place is not, it's planned, our insurance deal at this point is not in a catastrophic situation, So I like I said, I'm just disappointed. I never thought that we would be fighting to see, and like you said, oh sure, that what's being offered and so on. But the end result, though, is like when you are on a fixed income, and then when you go to and all of these things are not what you thought they were, and you're having a lot of out-of-pocket expense, that comes a time where you say, I can't anymore, So it's just a real, I don't know, an uncomfortable situation right now.
Yes, sir. Yes, ma'am.
I'm on Humana. I love Humana. I love Humana Advantage. Okay.
Thank you for being here.
I did an experiment just for my sake, because I know I've been following the blogs, and I know a lot of people who call their doctors, and their doctors say they don't take Humana. So I did an experiment for a new doctor I was going to. Do you take Humana? Yes. Do you take Humana for another one? No. Do you take Humana Advantage? That depends. Do you take the school board Humana Medicare Advantage? Oh yeah, we take that. Every single one of my doctors has taken it. I did another experiment to call because Blue Cross is coming up. Same experiment. Please, please, when you ask your doctors, don't just say Humana. And that point has been brought up. Ask for the school board Humana Medicare Advantage plan. You may be getting a different answer from what you've been getting. I understand there are some doctors that don't want to do the paperwork. They may not have it. But exactly, I'm paying no premium. My husband pays no premium, no deductible, no co-pays. We get a raise every month, guys, just from that. So please, please consider carefully. I have no problem going to Blue Cross if it's comparable.
I'd like to see us keep both. I'm just one vote. Or have both, not keep both, have both.
I have three things to say. And I'm so glad you brought up the candle metaphor since I'm an English teacher. Anyway, Edna St. Vincent Millay wrote, "My candle burns at both ends. It will not last the night, but oh my friends and oh my foes, it makes a lovely light." And that's what we want. We want the choice. We want the choice. And we have it now, and it's great. A few things, though. I know more about medical insurance and medical advantage and all that than I ever wanted to know. You have no idea how many people call me to sell me stuff, because that's the only way I can do inquiries online. But just a couple of things in my research. There is a difference between Medicare and Advantage plan. First of all, if you have an Advantage plan, yes, you still have Medicare, but you don't have a Medicare card. You have a card from the Advantage plan. I just want to make sure you understand that. And if you do not like your Advantage plan, you may go back. Now, I didn't know about the open enrollment. I understood that enrollment was October 15th through December 7th. You can go back to Medicare at any time? Okay, there you go. Okay.
Go back during open enrollment.
So it would be during October 15th to December 7th? Okay, so there's a limited time that you can go back to Medicare. And then the school system group Humana plan does have a maximum out of pocket. It's $1,000. Would the Blue Cross be the same? Okay. But with an Advantage plan, keep in mind, you cannot buy a supplement with an Advantage plan. So you really don't need one unless you got that $1,000 coming there from somewhere. Medicare is everywhere. Lots of times Advantage plans do not travel well. But apparently this is something you've been looking at. Now, with Advantage plans, many times you have to get approval from that Advantage plan. Like I was talking to a friend who did have an Advantage plan and was going through the doctor, and when the doctor came time for those specific procedures, that Advantage plan would not cover the specific procedures. Now, this is just anecdotal. This is what I was told.
Those are under the HMO plans. That's all.
Not the PPO. Okay, good deal. With Medicare, you can go to any doctors or hospitals in the U.S. that accept Medicare. With Advantage, you use the doctor or hospital on the Advantage network. And then Blue Cross Blue Shield supplement that we have now, or secondary insurance, covers covers prescriptions. You know that a supplement does not cover prescriptions. You'd have to buy Part D. No, but that's not a supplement. That's an Advantage plan. There's a difference. Okay, I did some research, and Daphne helped, so I asked the people that did the research with me to ask for Medicare Advantage specifically. But, I mean, I'm not a research person. But this is how it came out. 35 retirees that surveyed their doctors, with 87% will lose at least one doctor. Now, once again, I asked them because of Daphne's urging to say Humana Advantage. I don't know if they all did. And then, let's see, 44% would lose 3 doctors. And a lot of them that came back to me, they didn't even go through the entire process. One night I had a hard time sleeping because one of the ladies put on Facebook, my oncologist will not take Humana. That's hard to sleep with. But anyway, and then the other one, an average of 50% of the doctors currently used by us, by the retirees who all have, what'd you say, everybody has a condition, who responded to the survey would be lost with Humana Advantage. But once again, I'm not sure that they all did the specifications like Daphne. And then the last question, which I assume we're going to set up an employee meeting to talk about this, when would we, Mr. Fontaine, have access to that network that you talked about in terms of due diligence and the tightened fiduciary, am I saying that right? Yeah. Okay, Formulary, okay. When will we have access to do some more research, as long as you don't call me?
As soon as I get it.
May I make
Absolutely.
a quick comment? The reason that Daphne and her husband both have zero premium, he's also a retiree. If you have a spouse who is not a retiree, right now we have that premium at $49. So if you have a spouse who is also a retiree, they both get the zero, but if, like I said, it's 49 right now set for a dependent spouse.
I'll pay Medicare, I'll pay, you're on a supplement bill, and I'll pay, Blue Cross too. If you want to be managed, you're on Blue Cross, you pay.
Yeah, if you're with the LPSS plan, yeah, you're going to pay your Medicare premium, which is probably $109 or something, and you'll pay, or 130 it went up, and then you'll also pay the premium here at whatever, however it is that you are on the list and whatnot. So yes, you're doing that, but then what they're saying is that once this happens, you don't pay anything. It'll be taken care of from the board.
Can we get a microphone, please?
When I went to my oncologist the other day, I had to pay deductible. I thought when I was on Medicare and Blue Cross, I didn't have to pay deductible. I still had to pay my copay.
Might have filed it wrong.
What?
Your OBGYN office could have filed it wrong. I'm not sure.
It's oncologist.
If you have personal stories like that, you really need to come to our office and help. Let us help
everybody.
Well, you shouldn't have a deductible. That is incorrect. So something's wrong, and we need to help you fix it.
Okay.
I do know this, the situation is in the coding. A lot of times if they miscode something, it throws it to a different category, and then they pay very differently. That has happened to us once or twice, where we weren't supposed to be charged or whatever, and we were, but it was because they had coded wrong. Oh, and by the way, the employee insurance committee, we're trying to get together, and we're going to try to correlate that with Mr. Fontaine the second week of July. Okay, we want to have a meeting so that we can discuss what's going on, and in the meantime, several who couldn't make it tonight will link up with the streaming and get the information that we have, and possibly we can get somebody from Blue Cross Blue Shield here to be able to give us more insight as to what their plans are and what they're going to do. The second week in July, it's after. Oh yes, yes, definitely, yes, ma'am. Second week, I think the board will be meeting around the 26th.
July 26th. The board's not going to be making decisions on this right now.
No, they're not going to. The full board ain't going to make any kind of decision until you guys make a recommendation, and we make a recommendation.
Well, believe me, we're
at least 2 months away, I would imagine.
We are going to study it. Believe me.
I have no doubt. Well, my question was going to be, Mr. Fontaine, are you going to have the provider match document? What's the time frame on that?
I'm waiting on Blue Cross to give me the network. They just gave me a proposal on Friday, so.
Okay.
Yeah.
Okay. So I don't think any legitimate decision making could be made without.
Absolutely.
Okay.
Okay, so that's going to be a big kicker for that. We really need to have that information and whatnot. And do you? I mean, I assume you can't project when that's going to happen. Can we call them and find out what their projection is?
I will have that information for you tomorrow.
You got it. Okay.
What about the fiduciary formulary?
The fiduciary formulary.
I don't think that word means what you think it means, Ms. Hargrave.
No.
It's poetic.
I'm having that prepared. I should get that within a week or so.
And you'll let us download it from here, Lafayette Parish School System? We do that?
I can't see why not.
Okay, thank you.
Just a point of clarification. I've asked before, but I want it on the record. For those people that will never be Medicare eligible, will they be treated as active employees with those benefits and same premiums?
They do not have an option to be on the plan, so the answer is yeah. I will always vote yes on that. Yes.
Your one vote.
Yes, ma'am.
And I appreciate that. I really do, because that would put many of us in a bind. There are not many of us left, but there are a few. So
it's not your fault that you're in the situation you're in.
Yes, sir.
So you don't deserve to be penalized, in my opinion.
Thank you.
In this case, there is other opportunity that is equal, maybe better in some cases, and that's why Mr. Fontaine is presenting it. So yes, ma'am. I think Mr. Carroll, did you have your hand up earlier about something? Did I overlook you? Okay, I apologize. Yeah, no problem. Are there any other questions or comments at all? We're about to adjourn the meeting here, Mr. Centennial. Yes. I was telling you. Now's your time.
Several of us have had this discussion over and over again, and we're not real clear of exactly the motion that was made regarding the $470,000 for the next 4 years. What is the intent of that motion? Because it's not clear, because it says that, you know, if you find the 470,000 or save this in this amount and so on. So it's really not clear. Could you please explain the intent of that particular motion?
I'll explain to you how it works. So we went ahead and we cut $470,000 from the line item that transfers money from the general fund into the self-funded insurance fund. So essentially, we reduced the school board's contribution outside of the 87 sales tax, right? So we went over earlier where 50% comes from the 87 sales tax and 30% comes from the general fund. We reduced the general fund contribution at 30% by $470,000. And we said, please, Board Insurance Committee, Employee Insurance Committee, bring back plan modifications to save money in some fashion, which was item number 1 tonight. And once that gets adopted, that $470,000 reduction will go away. The intent being to motivate these two committees to sit down and talk and find some kind of arrangement, some kind of plan that works well for everyone involved. Retirees, active employees, the school board, everyone.
So then you're not going, if we save that amount, you're not going to remove that out of that insurance.
That was what the motion was, right? It says, if I recall,
if
I recall correctly, it said reduce it by $470,000 until such time as the school board adopts a plan to save that money, or something along those lines.
Yeah, when you read it, it's not real clear. And then in subsequent years, you have to do the same thing.
Well, that's the point. The point is that we have recurring savings, and that was what Mr. Fontaine mentioned in item number 1, where he said, you know, let's just say, for argument's sake, that everything but the last bullet gets adopted. That means we would be saving a little bit under $900,000 per year, which is at that point the 470 would stop being. The 470 would still be reduced, right? But it would be coming out of the savings here. Is the point?
Okay. Just when you're at home, read, because when from this perspective, it's really quite confusing.
Okay. I will.
Thanks.
Yes, sir, Mr. Baldwin. I think we had Ms. Saunier first. I'm sorry.
When you're removing the $470,000 and you're taking that out of the money that the board is contributing, you have to realize that the half-cent sales tax said it would contribute half of what the board and employee contributes. So that means you'd probably be removing $470,000 out of that portion that is being contributed to the insurance. Because if you deduct it out of what you're contributing, that's $470,000 less, which means That's 470,000 less that's coming out of the half-cent sales tax, because that is half of the total premiums.
But we removed it from the line item in the general fund budget, which is different than the 87 sales tax budget.
Yes, but the sales tax reads that you have to contribute half. In other words, the sales tax pays for half of the total premium.
And
the total premium is the employee and employee.
Half of the total collections of the 87 sales tax is being contributed to the insurance fund.
Okay, but if the board portion is not the, it's 470 less, then that's 470 less in the total amount.
That's incorrect, because the sales tax is paying half off the top. Now, assuming that the general fund didn't supply any additional funding and the employee paid the remainder, that would mean a 50-50 split. So the general fund is picking up some of that slack, let's call it, for the purposes of this meeting, of the remaining 50%. Well, you're picking up 20, so it's 30%. So taking that out of the general fund is not affecting anything having to do with the sales tax. The sales tax is still paying for half of the premium, and that's all it's required to do.
According to my math, that's not correct.
Thank you.
And I was a math teacher for a while.
Yes, ma'am. We have one more.
Mr. Hidalgo, I wanted to make sure that it's going to be at the end of this meeting, but I've been watching for about I'm not sure, 3 to 5 years. You can't, I'm not close
That's better. That's
better. Is that better? In other words, the last 3.5 years, that I believe I'm correct on the time, we've been trying to have, in other words, an RFP concerning the health insurance program for this parish. And what I'm wondering about is, are we on schedule to have that taken care of for this to happen this coming year?
Mr. Fontaine.
Yeah, we're going to receive proposals from various TPAs and carriers this year.
And that's going to include, is that going to be advertised out, or are we kind of picking folks to send a proposal? What is the process?
You guys will direct me in that process, but when we talk about entities that could offer a proper network and proper administration to your plan, there's about 4 or 5 of them out there that are really, worth requesting a proposal from.
I've heard from Mr. Baudouin quite a bit over the past couple of years, and if it's okay, I'd like to say that he does make a good point. I mean, we bid toilet paper and pencils and milk every year religiously. And my question is, are we doing our due diligence as a school system when we don't at least rebid? Nobody said change. You know what? Every year the same thing might happen. But every year the same milk subcontractor may get the bid. So I'd like to satisfy his question, and I can't. So maybe you can.
I'll satisfy your question in 2 ways. Yes, we will always perform the proper due diligence to make certain that the components of your plan are the best available in the marketplace. In bidding a self-funded plan, what you're really bidding is the services of your administrator, your preferred provider network, and your pharmacy benefit manager. So in the fixed cost of your plan, which in your plan is less than 10% of the total cost of the plan, one of the big things you look at is if we could find somebody to have a lower administrative cost, which is less than 10% of the total cost of the plan, but yet by doing so and changing networks, we lose 10% of the discount of 90% of the cost we've backed up, and we're spending more money. So it's due diligence that always needs to be performed to make certain that we hold Blue Cross's feet to the fire, that they don't increase those administration fees on us and things like that, and that our reinsurance every year, the reinsurance is bid out every year. Okay, that's just a normal process because you have to renew that coverage every year. But all of those aspects are taken into account. But I can tell you right now, from a network and a discount standpoint, Blue's very, very, very competitive in that arena. When you have the market share that they do in the state of Louisiana, they garner a very high discount. Now, that doesn't mean that Blue Cross would automatically deserve your business because of that, because there's a lot of other components to the plan that need to be studied. Administrative costs, case management, disease management, all of these things that have either a positive or negative effect on your plan costs.
But your RFP would dictate some of that. You get that right up front.
Absolutely.
You know who you're doing business with.
Absolutely.
You don't give it an opportunity to have it bid properly, then Lafayette is not getting the best price or the service.
I agree.
So I mean, so you feel that we need to have that done? RFP, I'm talking about.
From time to time, yes, sir. Absolutely.
Well, 3 to 5 years, we haven't had any competition whatsoever. You haven't been here, but you need to get up to date on that, I think.
Thank you.
All right.
Okay, if there are no other questions, going once, going twice, go on. Mr. Santana is going to close us out.
I got to be honest with you. I was really happy to hear that you were encouraged to get onto a high deductible health care plan.
Yes.
But
I'm not, because it's not best for my family. So we're going to pay the higher premium. Note that in your notation.
I will. Because part of this math, so I'm on a high deductible health care plan where I work. I'm not on the school system's health care, but I have a high deductible plan because you get to take advantage of the health savings account, which is triple tax advantaged, all this great stuff, right? And to Ms. Hargrave's point earlier about the $1,000 max out of pocket, keep in mind that you're not paying the $90 a month now, right? So you got $1,080 a year that you're not paying in premiums, which conveniently is more than the $1,000 max out of pocket. So you're almost guaranteed to save $80 no matter what happens, right? Well, there you go. So maybe you wouldn't actually be guaranteed to save money. But the question I wanted to ask was, back in November we had a meeting and I asked this very question about, because I think the step was we had I don't know, 80% of our active employees actually have less in claims than they pay in deductibles or premiums every year. And the difference that they could save by being on the high deductible plan was immense. And so I was interested in how we can encourage more of our active employees to be on the high deductible health care plan. Hopefully this here is a part of that, but I asked to have some kind of report showing the breakdown and what kind of education we could do with our employees, especially as we get near open enrollment, to try to encourage them, because I think they'll really like it once they get to the point where, I put my sheet away, the active employee by themselves on the Blue Cross PPO pays $154 a month by themselves on, is that the Blue Saver plan, the high deductible? Mm-hmm. By themselves on the high deductible plan is $10 a month. And so, just Ms. Hargrave, that's $144.
Unless you have a $150 prescription a month, then you don't move.
How many?
As I said, it's better for my family to stay on the plan.
I'm not saying it's not. I'm not saying it's not. However, I'm saying even if you took that $144 a month and put it directly into your health savings account, you'd still be out $154 a month, right? You'd be putting it in the health savings account, and let's say you go 6-7 months without having to go to the doctor's office. That's $144 a month that you don't have to pay taxes on, that money's in that account, that when you do go to the doctor, your copay and all this other stuff comes right out of that health savings account, and year over year over year, it certainly encourages you to be healthy. If you have a high deductible plan, right? It gets you, the whole point is you have a little skin in the game. So I would like to see at our next meeting some kind of educational material that will be handed out at open enrollment time, extolling the benefits to our employees. I would not like to write it. I would just like someone to explain, because You know, much the same way I try to explain to teachers every fall that a $500 raise is much better than a $1,000 bonus. $144 a month in your health savings account plan over the long run, maybe not next month, maybe not 2 months from now, but over the long run is far, far, far better for you than paying the $154 a month for services you may not need. Yes, sir, Mr. Mouton. I'm not talking about you guys. I'm talking about our active. That's why I waited till the end of the meeting after we were done with everything else. I'm just saying, I'm telling you, there's some real benefits to our active employees for being on a high deductible plan. Oh, I have 3 young children who sick all the time. I mean, they never broke up. I mean.
Mr. Angel?
You know, Mr. Centeni, your thoughts and advice could be well served perhaps in Washington.
But to answer your question, I do what I do every year is I take what I think I'm going to spend in healthcare costs, and I put it in my health savings account, so I don't pay taxes on it. Well, right, I know. I'm not saying it's not even available to retired people. I understand that. People on Medicare can't even do a health savings account. I'm talking about our 30-year-old teachers who have 2 young children who are paying whatever I mean, look, that was just the single employee, right? I mean, you talk about an employee plus spouse plus family, and I can't even get down far enough down the list to...
the meeting's still going on, please, guys.
Employee or retiree plus two or more, they pay $625 a month on the PPO plan. Employee or retiree plus 2 more on the high deductible plans, but $219 a month. All right? So, I mean, I've lost my place already. What did I say, 647? 625, right? So, I mean, you're talking about $406 a month that they could be putting in a health savings account that's tax-free. Tax-free. So even if you're in the lowest tax bracket, you're talking about an additional $40 a month that you're not going to have to pay to the federal government, plus another 5% to the state. Plus, that adds up, and it follows you for the rest of your life. All you can spend it on is health care. I mean, it makes all the sense in the world for me. I understand it's not the right thing for everyone, but I would like to see everyone at least be educated on the benefits of a high deductible plan, that they might be able to save themselves some money and better care for their family in the future. Thank you, Mr. Fontaine.
Mr. Angel, we're going to let you wrap it up.
If you took these 2 gentlemen on either side of me and added up their age, it would probably be somewhere around my age.
I'll have you know I turn 40 next month.
And except for the young lady in green who claims that she's 65 when she's really 50, I am more of your age, the majority of you here tonight, than I am their age. And as such, call it experience, call it simply being on earth longer. In some instances, think the same subject, the same item, sometimes I think of it a little differently. And we talk about RFPs, and I think Mr. Hidalgo made a good example about bidding out, everything, from toilet paper to paint to everything is bid out, construction materials, et cetera, et cetera. But when it comes to health insurance, you got to think about it a little different. Or at least I do. And sure, we have to do due diligence with respect for an RFP, and I agree with you. I think 3 to 5 years is a good time span. But we have to think about stability, confidence, and that kind of thing in the minds of these employees. And so, I'm going to be the first one that would raise all kind of cane if we paid more for something in this system than we really needed to pay. And I've been doing that ever since 1974 when I was first elected to public office in Karen Crow. We would bid out computers, we bid out automobiles, trucks, backhoes, everything is bid out. When it comes to human compassion, though, we kind of have to look a little bit differently from a pure bid point. And let's look at what makes people satisfied or content or happy or comfortable might be a good word, but we need to really consider the feelings of our employees and former employees or retired employees. Thank you.
All right. Meeting's adjourned. Thank you all for coming.